David Di Pilla from HMC Capital, welcome to the Alternative Symposium.
Thank you.
Can you provide some background on HMC Capital and your underlying strategies?
Sure. HMC Capital listed on the ASX back in October 2019. Our ambition is to become a diversified alternative asset manager, providing outsized returns to our investors on a risk-adjusted basis that are non-correlated to underlying markets.
And what's HMC's biggest differentiating point or competitive advantage in alternatives and real assets?
Yeah, well, I think it stems back to the genesis of the business nearly 5 years ago when we put a consortium together to buy the Masters portfolio from Woolworths back in 2017 now. We've built a business, we've built an operating platform to operate assets as well as having a capital asset management capability. So bringing the best of financial capability together with operating capability gives us the ability to basically add value to our assets and really play an active role in the management of our underlying portfolio of assets.
And what's the premise of the recently launched Capital Partners Fund?
So HMC Capital Partners has been built around current market conditions. We think it's a great opportunity at the moment to be investing in a diversified portfolio of assets across both listed, so we're taking high conviction strategic stakes, and private equity opportunities. The recent sell-off in markets is really creating an opportunity-rich environment. We think that now's a great time. In these sorts of market times, the easiest thing to do is to pull the doona cover over, sit on your cash and do nothing. We think now is the moment to deploy capital into some of these opportunities, which we see as quite rich out there at the moment.
And this is like a private market approach in public markets?
Well, it's a bit of both. So it's high conviction strategic stakes in listed assets, and it's also private equity. So it's really the genesis, again, is the fact that we looked out to the investment environment at the beginning of this year and said, inflation's bubbling away, interest rates are at an all-time low, equities are trading at 30 times forward PE. That is not a sustainable long-term situation. Equities are going to crack. So we've seen equity markets retrace over the recent months. As a result of that, we see a lot of value in the listed market. So the ability to take high conviction strategic stakes in listed entities and then bring real influence and change to those situations is something that we see great opportunity in. We've recently taken a stake in Sigma Healthcare. We've taken 14% of that company. So we see a number of other opportunities out there on the horizon.
And can you provide an example of one of the other success stories?
Yeah, so Sigma's obviously one that we've got in the fund at the moment, but last year we took a strategic stake in Japara Healthcare. Due to cyclical factors, the market had oversold that asset because of obviously there was a royal commission into the sector and so forth, so investors sold it down to 40 odd cents a share. We did a bunch of work on it, identified that there was net asset backing in that stock of about $1 a share. So what we did is we took a stake and we built a stake around 65 cents a share. Late last year, two parties approached the company and there was a takeover bid on foot. We ended up exiting at about $1.40 a share. Again, our thematic approach is trying to find these opportunities, non-correlated alternative assets, but our investment approach is always built around real assets. So we're always looking for real asset backing in our underlying investment opportunities.
And what do you see the key benefit of advisors adding this sort of strategy to their portfolios?
Look, I think it's unique. I don't think anyone is pursuing this kind of strategy in Australia at the moment, where we're trying to take high conviction strategic stakes in listed entities, but then with the overlay of a real asset backing. So it gives you the ability to say, right, there's a floor on the share price. If we get the analysis right, then obviously we see asymmetrical upside. But in addition to that, our philosophy as a manager is to take very concentrated positions where we can actually influence change. So we're prepared. We're not a passive manager. We're prepared to get our hands dirty. We're prepared to get involved, and we're prepared to make change and achieve outcomes for our investor base.
David Di Pilla, thank you.
Thanks for your time. Thank you.